The current price of Bitcoin is roughly, 95% discount to the imputed or implied value of the synthetic CDS, as Greg has outlined it. Now that's a huge discount. What you're putting forward there is to me, if I was working a desk on Wall Street, I would be able to sell that all day long. I don't understand. I mean, in 1980s, I was selling quote unquote portfolio insurance and sold a lot of it. Of course, that led to the 1987 crash, but that's another story. But in other words, the story is you've got $1 million or $10 million stock portfolio. We can wrap that for 2% a year with derivatives, and you've got a maximum 2% downside on your portfolio, and you've got all your upside. Probably in part because the hedge fund people that are in crypto, like, not to pick on Novogratz too much, but nevertheless, he is the highest profile ex-hedge fund guy in the crypto space. He lives for gamma, right? He never puts this pitch forward because it's so easy to make money shilling shitcoins, you see? Yep. If there was some law that applied, some serious enforcement of the current law, they don't need any new laws. All that Gary Gensler has to do is enforce the current laws. And, Novogratz would be forced to actually start working for a living and not just shilling crap. And he'd have to look at this trade as Greg has outlined it, and put the power of his fund and his colleagues focused on this. That's another benefit. I think that's another reason why Gary Gensler is completely a captured and unreliable regulator, because he realizes that if he took away the punch bowl of having these guys print money in the shitty way that's completely illegal, they might focus on Bitcoin more, and that would, hurt his paymasters down there on Wall Street. What about MicroStrategy's stock? I mean, the Bitcoin on the books is worth more than the current price of the stock by, I believe, a significant factor, and they still have an ongoing enterprise software business, which you're getting for less than nothing. So you've got a lot of money in this thing, and you've got a lot of very high-priced lawyers lobbying Washington to turn this into an ETF, which I think is the arbitrage here, is that they will succeed or they will fail. But I think given the amount of money being thrown at the lobbying to convert this to an ETF, the chances of them succeeding is pretty high. So you've got a great opportunity there. Right. Well, going back to long-term capital management. So this was a situation where Alan Greenspan, who was running the Fed at the time, lowered interest rates to bail out LTCM. And so all the pensioners in America had to collectively bail out these hedge fund guys in Greenwich, Connecticut, as Greg was saying, socialize the losses. And we saw that, of course, in 1987 when the plunge protection team was created. Again, Wall Street lunch was saved, but the losses were distributed to the masses, and the Wall Street was saved. We saw that in the 2008 subprime crisis. Again, the bankers were saved and everyone else had to suffer. And we're seeing it right now. There's the crisis part 2 from 2008, and everyone who's on Wall Street and is a banker is getting bailed out, and everyone else is suffering from inflation, and everyone else is suffering from price distortions and social unrest. Again, it goes back to this idea of moral hazard, which is, again, the wiggle room. When the central bankers and Al Greenspan and others, or Ben Bernanke or Jay Powell says, we have the right to engage in moral hazard. We have the right to bypass ethics, morality, and the legal system to protect the functioning of these markets and to protect the liquidity of these markets. And what that's done is created an economy and a society based on fraud. If long-term capital management was leveraged at 100 to 1, the Federal Reserve Bank conservatively is leveraged at 50 to 1, if not closer to 80 to 1 right now. So if they try to take rates anywhere higher, you're going to have massive default at the central bank. The central bank is going to need a bailout. So in 2008, Federal Reserve bailed out Wall Street. They swapped all their bad debts for fresh treasury bills, and they put all that bad debt on the books of the Fed. Now all that bad debt is worth 0 cents on the dollar, and nobody wants to buy U.S. Debt anymore. The U.S. Treasury bond is being vomited from the reserves of countries all over the world. Nobody wants to buy U.S. debt. It's no good. It'd be stupid to buy U.S. debt. China's getting rid of their debt. Russia's gotten rid of all their debt. Japan is a huge basket case. Japan is actually the linchpin that holds together this whole global Ponzi scheme, because they always had the lowest rates, and you could always do that carry trade of borrowing in Japan and putting your money into some other currency and making a positive spread and then leveraging it up 20 times, and you've got this great carry trade. But that looks like that's also blowing up. So, I mean, I understand yield curve management. I understand that they can try to bring rates to a higher level, and I can understand, but that presumes that the game has another chapter to it. I don't think there is another chapter to it. I think the Fed goes bankrupt. I think the U.S. goes bankrupt, and I think that that's what we're looking at. And I think this is why there's a lot of countries are beating the war drum right now. There's a lot of saber rattling going on, and there's the U.S. now is going to open up another front against China, as well as the proxy war in Ukraine against Russia. So this is the end of empire stuff. As the dollar loses world reserve currency, Brady, the problem is that other countries are saying, you know what, maybe we don't need America. Maybe we don't need the US dollar. So in this crisis, the difference with this crisis, Brady, is that there's no coming back. The inflation we see now is not going to reverse. Gas is going at $10, $11, $12 a gallon, and it's not going down. Prices of food are going to go up on a permanent basis because the entire globalization of post-World War II is becoming unglued, and the dollar as world reserve currency is losing its cachet. And this is a new reality. As a result, we are now in a new era, which is a multi-year, secular, inflationary, commodity-driven global economy where money printing and the central banks become increasingly more powerless. Gold has a problem with price discovery, we've discussed before. Bitcoin, the price is off its highs, but I think of it like this. When it was at 70,000 a coin, it was telegraphing the hyperinflation to come. Markets are discounting mechanisms. Now that we have a big burst of inflation, it makes sense for Bitcoin to pull back and retrace some of the gains and build a new base, and then catapult up to 200,000-300,000 a coin as the world starts to figure out that there's very few places to hide. As a matter of fact, I would say the only place to hide is Bitcoin.